Good afternoon and welcome to our weekly livestock market update. I'm Brownfield News Anchor reporter Meghan Grebner. With us this week to talk livestock markets again is University of Missouri's Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
You know, each week I hope and pray that we start on a positive note, and it seems like we have the same type of tone this week again, and that's really not positive. It's a negative, another negative week in the livestock markets.
That's right. I feel like we've been on a broken record here for a while in terms of the news that we've gotten, and this week continues kind of down the same trend. If you look, feeder cattle down 2 to 6 this week relative to a week ago. Calves 6 to 10 lower. When you look, we've been lower a couple dollars on pork prices this week. And I remind us, all right, so fed cattle, you know, we can continue to be on that negative tone. Fed steer prices, they're the lowest we've seen since early June of 2011. So we've certainly come down from the lofty highs of a few years ago. Nothing like additional supplies of meat to continue to put pressure on markets. It reminds me, when you look at chicken production this week, it's the second highest level of weekly chicken production ever. So that starts to frame some of the issues that we face today.
When we talk about those numbers, both cattle and hogs, we saw the fire earlier this week at the Smithfield plant. How does that impact prices, and does that have a big impact on prices?
We certainly got some short-term, I think, market effects from that fire. Many of us wondered how long that plant would be offline. A little shy of 11,000 hogs a day is that capacity there in Illinois. Luckily, I think we're back to a full shift today, so short-lived. But when you look at where futures markets went for the week, they were certainly down Tuesday after what happened Monday night in that plant. And I say it's much more critical today than it's probably been in the past, because we're already running very large numbers of hogs on a weekly basis, and we need all that shackle space possible as we continue through 2016. So having a plant go offline right now is not the most exciting news for pork producers, and I think added to some of the negative sentiment that you saw out there this week.
One of the things that we keep talking about, Scott, is that even though prices have been going down on the livestock side, those input prices have been going down as well, and producers are still seeing at least some profit. As we look at this continued downward trend in livestock prices, how slim are those profit margins for livestock producers right now, and are we still hanging in the black?
Yeah, so I think, you know, it's interesting. We've changed a lot. I remind us all the time that we've come off of record high returns. You take cow-calf producers, for example. If you look back at 2014, where we were at the high, that was over $500 a cow. If I was out doing Outlook around the state, I could certainly get producers to laugh when I asked them if that was the first time they ever had to pay taxes. So it was a very good year. If you look at 2016, I think we're going to end up somewhere around $60 or $70 a cow return. So it's still positive. And I think it's important to remind ourselves that although things have come down tremendously, that $70 return will likely be either 8th or 9th highest since 1990. So it still ranks up there fairly high. It's just, boy, when you come off of the record level prices that we saw a couple of years ago, it's not much fun on this downside of the roller coaster that we've been on. On hogs, I think we would be in the red in hogs if it were not for very cheap corn. The fact that we can feed, in some cases, I know here cash prices in Missouri setting in some cases 30 cents below $3. So $2.70 corn works a lot better on the hog side. But again, I think in both cases we're getting very near where we're going to start seeing some red ink flow. And producers have to be prepared for that. I think we've talked before about how do you look at the cost side of the equation and do everything you can to slim down those costs without affecting the revenue side of that equation as well.
Let's talk about some of those other factors that go into profitability and things that producers need to see. We keep talking about trade. Where are producers sitting there, and what do we need to be watching in that regard?
Yeah, so we did get an export report out this week. And by and large, we'll get a little bit of positive news here for a change. So if you look at July beef exports, up about 8% from a year ago. On a value basis, we were down a little bit as again, cattle prices, beef prices have come down. But it's nice to talk about larger supplies of beef leaving the U.S. On the pork side, we were up 8% relative to a year ago. For China, important there on the pork side. The news is not quite as positive as it was a few months ago in terms of trade with China, but still positive. As pork prices there have come down some over 2016, perhaps our ability to export a lot more pork to China may slow, but more exports is important. If you look at exchange rates, at least the dollar hasn't strengthened as we've gone through 2016. We've frankly been fairly flat. It's just unfortunate that it's a stronger dollar relative to where we were a couple of years ago. But at least we're not continuing to see it even strengthen further as we go through 2016.
Scott, we have a couple of reports out next week that we need to think about and to watch. One of them is WASD. The other one is Iowa State's fair to finish returns. Talk about those reports as we head into them, and why we're paying attention to those numbers.
Yeah, so the WASD report next week will be important again because we'll get another estimate of both corn and soybean yields as we get, in some cases, harvest underway, other cases, harvest getting pretty close. Hopefully we continue from a livestock perspective at least to talk about large corn and soybean crops so we can keep feed costs in better shape for livestock producers. On the fair to finish return side, we will get August returns out from Iowa State next week. Again, that balance between lower hog prices and lower feed costs, we've kind of walked a fine line there that's kept us in the black. We'll see what Iowa State says when they release those returns next week. We'll also get a little retail data back out again, so a little more consumer sentiment data, what's happening on the demand side, what's been happening to retail prices, all important as we kind of set the stage for the latter part of 2016.
And we are officially kicking into Q4 of this year and some of the things that we're watching as we head into 2017, correct?
That's right. I mean, number one, front and center, we're really going to start worrying about what's those hog runs look like in the last quarter of 2016, and do we run out of shackle space? Again, we can go 2 or 3 weeks with pretty tough runs of hogs, but if we have to go 7, 8, 9 weeks where we've got more hogs than we have capacity, that catches up with us eventually, and hopefully we can avoid that, but it's something we're going to be watching.
Scott, we haven't had a lot of positive news in the last couple of weeks, so as we finish up today, I'm going to give you a chance to be a ray of sunshine for our livestock producers. Any good news and anything positive we can talk about?
Well, so I'll do my best here for a minute on the cattle side. I will say when you look at slaughter weights on cattle, we are below a year ago, and in some cases substantially below a year ago in terms of slaughter weights. That helps us at the end of the day, although we have higher cattle runs. Less beef per carcass out there is certainly going to help us. I think that's likely going to continue. So, I remind us when we got to this point last year in 2015, the news was out there that we were backing cattle up in feed yards in probably a large way. And you look today, even the number of cattle that have been on feed for more than 120 days, I think we're down a little over 5% relative to a year ago. So a lot more current in terms of cattle, and I think that's going to keep weights down in front of us. Maybe that's enough as we go through this last quarter of 2016 to get some rally in cattle prices. I do think we've seen a lot of speculative activity that have just been terribly negative in terms of cattle prices, that if we can get some slowdown in that rate of growth of beef supplies, we might be able to come out of this last quarter of 2016 with some rally in cattle prices. I don't want to overstate that positive as we close today, Meghan, but it's nice to suggest maybe there's something on the horizon for us.
Well, we always look forward to that ray of sunshine. Scott, good to talk with you this week.
You too, Meghan.
To subscribe to our weekly livestock market update, visit our website, brownfieldagnews.com. I'm Meghan Grebner on Brownfield.